Right, today's video is about this morning's trade. I took the trade after the 8 o'clock watershed, as it were, 8 a.m. And as I've said on previous videos, I do like to be out of my trade on prior to 7 a.m. But if there isn't a good setup there, then you just have to wait, and or I just have to wait. Now, there's no problem with that because you know you can plan your trade, you can put your levels on there. As it was, there was some news at 9:30 which was causing the price to go sideways, relating to the pound. I forget what it was, some sort of consumer price index or something, or retail news, which was good, which sent the pound long. But I don't take the news into account as per, say, trading the news. It is just a question of use the charts, look at the charts. If it's going sideways, it will probably be because something fundamental is affecting price, and that's it. So I put this little indicator on here. I forgot I used to use this for the daily. Yesterday's high and yesterday's low. That's quite obvious what that is. If you ever need any of these indicators or want to know the settings and so on and so forth, you can contact me via the YouTube comments section. There we go. And later on I will sort of set up a blog where everything is available for free. So here we go. This morning I came into the charts, as it were, with the price. This candle, today's candle was red, and after such a huge great candle yesterday, I think it moved something like 300 odd pips yesterday. There is likely to be some sort of pullback. That's just the markets loading up with buy orders in order to potentially continue on up to the long side. Now, on this daily chart, I also wanted to put, or did put, a support level on, because the price tends to test levels of support and resistance. So this daily candle here, this little red one, is a potential target for price when it's moving to the upside, because when it broke, you can see what happened. We had a massive candle to the downside. So that's just what they call market theory, market analysis. It's just supply and demand analysis. If the price reacted to an area that's drastically, then it's likely to go back and test it. I like to trade what I call tests and retests of support and resistance, or I like to use those as a guide to the direction of price. So we drill down into the lower time frames, bearing in mind this was a red candle here, so I was wary of the fact that price could retrace. So we go down to the H4, and I mark off the H4 candles, just levels that I expect price to have to break through or test again, as I mentioned before. So we can put an H4 on the low of that candle, the green one. We can put an H4 on the low of the red one. We can put an H4 resistance line on the high of the red candle. Remember what I just said about testing old levels. It's pushed up, stopped at that level, then come back, opened here and pushed up again. So the high of that candle is likely to be something of significance. Then H1, bearing in mind this green candle hadn't formed at this stage, we were just on a sort of downward trajectory, as I can't say that word, never can. So H1, and all the while I know that I want to be looking for longs because I've got the moving averages to the long side. The indicator CCI 80 is telling me that I should be looking for longs, although it went into an overbought area here because of this big move yesterday. 30-minute, well, we haven't marked the H1s, let's zoom in a little on the H1. So while I was here, remember, I had missed nothing excuse me, interesting at that stage. I was having breakfast with relatives anyway. I wasn't looking for a short trade at all, unless we broke through the this sort of H4 low here, and then it's liable to push down, push up, and then come down like that. So trade the retest off that level. So push down, push up, continue. So short of just putting a few levels on here to see what the price would react to, and that's the H1 low. We'll put a level on the H1 high there, and then we can drill down. Remember, I only really trade the H1 as an indicator of which way the price is going. Well, we could see it was falling throughout the post-Asian session, as it were, and this was pulling down. Now this is just, if you remember how I trade the 5 minute, this is the oversold. This is what we're ideally looking for. It's absolutely perfect. A nice and an increase in the value of these here. As I said before, I didn't want to really get too involved with any knee-jerk reactions until 9:30 when the news was out. But you can see what they're doing. They just sort of price in the news anyway, and they're just catching a few stragglers, faking people into the short side, who would have been thinking the same way as I was, that after a big move to the long side, potentially we could get some downward movement today. But you can see that's what they were doing here, loading up with the buy orders, pushing the price down, getting a better discounted price, if you like, before they drive the price up. So M30 now. M30, we can see this was the pre-London Open push to the downside, and now we can start taking a bit more notice of the indicators. I want to put, if there were any candles here, I'd want to put a level on the high of those M30s just to see what was going on, but there wasn't anything significant there. The H1s take precedence, of course. Higher time frame always trumps the lower time frames. Here's an M15 level that I'd like to see broken, and clearly see what's happened there. It has actually broken it, and then we can see the M15 doing what it should do as well. We've got the oversold area here past the 100, 120 in this case on that little yellow marker, and once this has posted a growing bar, as it were, from 39 to 76, we're looking good to go to the long side, which is what I was waiting for, remember. And I actually took my trade as a result of the close of this bar, as I say, expecting that to get hit. Now the gaps between these faint lines are 25 pips, so you can clearly see we've got about 60 or 70 pips. So now how did I actually remember in the previous video I talked about tick boxes? Well, the moving averages are in the right direction. The 7 CCI or 8 CCI in this instance, it doesn't matter what you use really, just use whatever you fancy, you know, between sort of 6 and 9 I suppose, or 6 and 10. That's above zero, that's green, which is great. This is risen, as I said before, and that's the critical bar. Look at that, that's not higher there. I'm not above this support and resistance level here. You can see we've got no lows below us here now. We've closed below through that resistance, and that's it. So I can tick my box that the MAs are in the right direction. I can tick my box that the CCI 8 is in the right direction. I can tick my box that the CCI 80 has risen, and the time was about I think that says, I'm not sure, but I think that's 9:15, and good to go. So that was that candle opened at 85. Opened at 160.85, and the high was 161.23. So there's a good 38 pips less the spread there. So I took my normal morning's 10 pips out of this, and I'm a happy bunny. Thank you for watching. It's just common sense trading. keep it as simple as you possibly can. Oh, we had the cross there, but you know, as long as I'm not trading against a cross like that, then I'm a happy bunny. But that would be automatic as a result of the moving averages being across in the right alignment, as it were. So that's it. Thank you for watching. I hope this helps.